Good morning, and a terrific Tuesday to you. Welcome to today's episode of Morning Wealth. Three things that we will talk about today: no premium for newly built homes, new orders for durable goods increase, Tesla earnings, a detailed breakdown. The Nasdaq Composite on Monday set its first record since February as investors looked ahead to a busy week of corporate earnings reports, including from some of the biggest technology companies. The tech-heavy index gained about 0.9% to close at 14,138, its 13th record close of 2021. The S&P 500 was up 0.2%, also setting a record. The Dow Jones was down by 0.2%, just 0.6% below its high from earlier this month. Treasuries dipped a tad, the 10-year yields hovering around the 1.57 mark. Dollar was mostly weaker against its G10 peers, with the Aussie leading the pack. Yen retreated. Oil fell and gold edged up. Asian equity futures are narrowly mixed. The premium for newly built US homes vanished last month as low supply fueled price increases in the broader market and erased the discount traditionally associated with older properties. The median sales price for a previously owned single-family home rose to about $334,500 in March, while for new properties sold for a median of about $330,800, making a reversal in the differential for the first time since June 2005. Orders for long-lasting goods resumed growth in March as US recovery stoked manufacturing demand that has been building up since last fall. New orders for durable goods, products designed to last at least 3 years, such as computers and machinery, increased 0.5% to a seasonally adjusted $256 billion in March when compared with February. Orders have increased 10 out of the last 11 months. Low business and retail inventories have translated to increased demand for manufacturers for much of past year, but supply chain issues continue to constrain production and delay some shipments. On to Tesla, lots to talk about here. Tesla posted a record quarterly profit despite supply disruptions fueled by rising deliveries and increasingly broad-based demand for electric vehicles. Tesla reported a higher than expected 7th consecutive quarter of profit on strong demand from its top-selling Model 3 sedan, but left its multi-year outlook of a 50% growth in deliveries unchanged. The Silicon Valley car maker has enjoyed booming sales driven by both its popular Model Y compact sport utility vehicle and sustained demand in China. The company also has benefited from a wider embrace of plug-in cars as governments across the world push to phase out gasoline-powered vehicles. Tesla on Monday said revenue in the first quarter jumped 74% from the same period a year earlier to $10.4 billion. The company generated a $438 million net profit, up from $16 million a year ago. Wall Street on average expected the company to report sales of about $10.5 billion and net income of about $509 million for January through March period. Tesla delivered about 184,877 vehicles in the first 3 months of the year, more than double the number during the same period a year earlier. The company, which delivered nearly 500,000 vehicles in 2020, reaffirmed it expects the figure to rise more than 50% this year. Tesla vehicles account for about 70% of all electric vehicles sold in the first quarter. This is according to a research firm. That is down from about 82% during the same period a year earlier. Its cash holdings fell to about $17.1 billion from $19.4 billion as it reported a purchase of about $1.4 billion worth of Bitcoin. Remember, the company is also accepting Bitcoin as payment for products sold in the US. Tesla made about $101 million selling Bitcoin in the first quarter on top of the raw automotive profits and regulatory credits. Another important point is that the company said it had successfully lowered the cost of making cars, helping offset a decline in average prices of its vehicles. The company's bottom line also benefited from several factors not directly linked to car sales. Its financial results have been aided by sale of regulatory credits to rival automakers that need them to comply with emission-related rules. Such credits brought in 518 million in the most recent quarter, up from about 354 million during the year earlier period. Tesla had previously said it doesn't expect such sales to be a material part of its business, but given the numbers, it is for the time being at least. China has been a growth engine for Tesla, helping to lift the company to its first full year profit last year, but the company has hit a rough patch in the market recently. Chinese authorities summoned Tesla in February over consumer quality complaints. The government also restricted the use of Tesla vehicles by military personnel as well as employees at key state-owned companies over data security concerns. Overall, very good numbers from Tesla, though the market was expecting a slightly better print in terms of net profit. The stock was down about 2% post-market. That's the update. Have a terrific day ahead, and I'll speak to you tomorrow.